right, welcome. I'm happy you're taking some time to listen to this presentation. This presentation is not gonna go more than 40 minutes. We'll try to keep it simple and direct to the point, and we will be talking about everybody's favorite topic, taxes. I'm just kidding. Most people don't care about taxes, but unfortunately, wherever you live, you have to pay taxes, especially in the United States. Taxes, it's something that is part of life. And there's one president who is famous for saying, there are two things that are certain in this world, death and taxes. So we are not going to talk about death because there's nothing we can do about that, but we can certainly do something about taxes. So before we go any further, let me share a little bit about my scholarship in this regard so that at least people have a good understanding as to who is presenting, what type of background this person has. So this is a little bit about my background. Yeah, so that's a little clip that I wanted to show, which captures some of the services that we provide, but we'll speak a little bit more to the services and what else we do as we proceed in this presentation. So again, this is an introduction to the US tax system. Each country has its own tax system that they abide by. So if you're in the United States, this is the course or presentation, which is going to help you at the end of the day. Our objective here is to help new immigrants understand the US income tax system. And also at the same time, like I say, it serves as a refresher to others who are familiar. And also in this course or this presentation, we'll be looking at the basics of income tax, tax forms, credits. What are credits? You've heard about what is a deduction, special cases for immigrants, and also filing procedure. When do I file my taxes? How do I file? And things like that. So we're going to discuss all these things as we proceed. So what is the US tax system? So the US tax system is broken down into 4 or 3 steps. So there's what is called the federal taxes. So federal system, you pay federal taxes. What is the federal system? So for instance, President Biden, President Obama, President Clinton, those were in charge of the federal system. So under the federal system, there is what is called a state system. So the US is made up of 50 states. So each state has its own policies when it comes to taxes. Now, the federal government, which oversees the whole system, is under what is called the federal law. So there's what is called federal taxes that you pay. These include Medicaid, Medicare, and things like that. So there are state taxes that each state, some states have federal taxes, some states have state taxes and others do not, but we'll talk a little bit more about which ones have state tax and others which don't. So for the purposes of this presentation, we're just going to look at their federal taxes that you pay to the federal government, and then there are taxes that you pay to the state government, state taxes, and local taxes. So also under further, you can say there are taxes, for instance, that municipal government or municipal taxes. So this is why in certain places when you go, it looks beautiful, it looks nice. When you go in certain parts, you find that it doesn't look so nice. Sometimes it's due to the taxes, that city tax, county tax, municipal tax, but the main ones are those three. So why pay taxes? So people pay taxes for infrastructure. Infrastructure, these could be roads. When you're driving out there, you find that it's a beautiful road. Somebody has to take care of that. And how do they get the funding? They get the funding from the taxes. There are public services, obviously, to help people who may be having some challenges, sometimes keeping up with the economy. There are government funding streams that are out there, and also healthcare. Now, on healthcare in the United States, it differs, for instance, from Canada or the United Kingdom. So there's in the UK, they have the national health system where the tax dollars help to fund the healthcare system. But unfortunately, it's not the case in the US, except for people who are above 60, 65, then you qualify for Medicare, and the Medicare system, the Medicaid, and there are others with who may have some challenges, medical, developmental, or other disabilities that may qualify before getting to the age of 60, 65. So taxes keep the country going. Taxes is what funds the government, and the government gets these taxes from taxing the people. When you work, before some of you see your tax, you see your pay stub, you see your paycheck, the government takes out its share of taxes. Types of income. So there are two main types of income that we're going to discuss in this presentation. So there's what is called earned income. Earned income when you work for a company and you put in some hours, 40 hours a week, or now people are calling for 32 hours to be a full work week. And that check that you earn after you have gone, clocked in, put in some hours, it's called earned income because you've earned that. It's not given to you for free. And the other type of income is called unearned income. So this is income that you could gain from, for instance, like when you interest from investments, dividends, or capital gains. Let's say you are the lucky one, you scratch buy scratch cards, you win the lottery, or you win big on some scratch cards. By the way, I'm buying scratch cards. I'm hoping I'll win. It's just a matter of time. So, but I'll share with all of those who are listening to this presentation. Just when I win, I'll remember you. Yeah. So you see, those are the two types of income. So when I win the lottery, that is not money that I earned. I did not put in any hours. I did not work for anyone. It's money that I somehow, through some means, it falls on my laps. For instance, if you invest into a company and you get capital gains, you get your dividends, you get your interest, that is income that is unearned. So those are the two income streams that we are just gonna be talking about. So we try to keep it basic and simple. So at least, again, the purpose for this presentation, it's for those who are not familiar with the system. So at least you get a good understanding. Now, so when it comes to income tax, there is what is called state income tax, and then there is also local tax or municipal tax. So, for instance, there are states like Florida, Texas, Nevada, Washington State, and others. These states do not have state income tax, but they do have federal taxes. You have to pay your federal taxes. You cannot opt out of paying federal taxes. Yeah, I am aware of the tribal treaties that the US government has with the native folks, but that's outside of our scope for this presentation. So for this presentation, you have to know that among the 50 states, there are a few that do not require their citizens to pay state tax, but you cannot opt out of the federal tax. So city or county taxes, these are for local services like schools and public transportation. So depending on the area where you live, there is a school district. Some school districts look better than others. It's due to the taxes that are being levied in these areas. So tax brackets and tax rates. So this has been a debate for quite some time where the US employs a system called progressive tax system. So this simply means the more money you make, the higher your tax bracket. So this is why others have said, no, we need a uniform tax system. I remember one presidential candidate, Ben Carson, when he was running, he was trying to say, we're going to streamline the tax code for the US and just make it like a one page. So at least everybody just pays maybe 10%. But we know Ben Carson didn't win the presidential race, but we have the current system, which is progressive. So others have objected, hey, we don't want this. But apparently, this is what we have to deal with, and this is what we have. So you have to understand that the more money you make, the more taxes you have to pay, unless if you go further up the high ups, the 1%, those are people who are able in some ways able to circumvent the system, and they play a lot of gymnastics, tax gymnastics. And I'm sure some of you are aware of some people who are running for president, and they had every reason, had to come up with every reason not to produce their taxes, because the further up you go on the tax chain, the 1% tend to pay the least tax. So this is obviously there are ethical concerns, but I mean, who am I to change that? But just know that the US has a progressive tax system. The more you make, the more you get, the more you get to pay in taxes. So 10%, if you make an income, for instance, for last year, it was under 10,000, you pay 10%. If you make more than 10,000, and let's say you made 14,000, so which means your tax bracket is going to be 10 plus 12, which is 22. Now, so there is a cutoff point. So most people in the US average is about 45 to 50,000. That's what they make in a year. So for the purpose of this presentation, we're going to focus it mostly between from the 10%, if you make less than 10,000, and if you make somewhere 10,000, but somewhere below 45, then your tax code is 10 plus 12. Now, if you make above 45 to 85, that is if you're single, we'll talk a little bit more about that. Then you pay 10 plus 12 plus 22. It puts you in a different tax bracket. So it's always important to understand what tax bracket you're in. So how to tell, the IRS has publications that they put out. You can check the IRS website, or you can consult your tax preparer to help you with that. So, but that's not something that you should concern yourself for the most part. When you receive your pay stub, there are three initials, YTD, year to date. So you can check how much you've made at this point, and then if you follow the bulletins that the IRS puts out, you're able to see, oh, I think I'm in this tax bracket. So that's how you keep up. Filing status. So when you're filing taxes, there are three general categories that you have to select from. These are not all exclusive, but they are, for instance, there are others. We will talk a little bit more. So a single person, individual who is not married, has a certain tax filing status. When you file your taxes as single, there is a deduction that is due to you according to your income. So you fall into a certain bracket. We'll talk more about that. And when you are married filing jointly, you also fall in a different bracket. So there is also a deduction that is accorded to whether you're married filing jointly. But when you are married filing separately, it's pretty much the same as single. So when you are married filing separately, the IRS considers you that you are single, but they still expect you to indicate that you are married, so at least the information is captured. Now, head of household is a person who has a dependent. You could be married, unmarried, and pay more than half. Let's say you are caring for a dependent in your household, and you paid more than 6 months, at least 6 months of support of whoever you are taking care of, or it could be a niece, nephew, or a relative. But again, they have to be below a certain age limit. If they are in school, they have to be by below age 24. Now, the standard one is below age 19. That's how you get a little bit of kickback in terms of some adjustments on your income. So reducing your tax liability is the goal. When you have a child, when you have a dependent, it helps to offset what you owe to the government or your tax liability. But we'll talk a little bit more about that. And so for the purposes of this presentation, those three are the common ones: single, married filing jointly, and head of household. So it's the best option for filing status. If you're married, the best option is to file married filing jointly, because you get a significant tax break. And the second one is head of household, and the last one is single. Common tax forms. So there are a lot of forms that are used for taxes, but the main ones that we're going to talk about in this presentation are those three. So the first one is called a W-2. So if you are working for someone and they take out, or what is commonly said, withhold taxes on your behalf, then the form that you receive at the end of the tax year is called a W-2. So a W-2, in other words, is a statement of earnings from an employer that withholds taxes on your behalf. In other words, when you work for other people, they take out the Medicaid, Social Security, and all that good stuff. Then the form that they give you is called the W-2. So when you're filing taxes, the good thing about that is you don't necessarily have to worry so much how much should be allocated to the state, the federal, and the city, and all those things. So because that is already done on your behalf. Now, a freelancer or a contract worker or a caregiver, a Uber person, a person who drives, let's say Lyft or Uber or whatever else is out there, you are considered as a contract worker. And I'm aware that where in California, people wanted to, if you drive for Uber or Lyft, I think it was Uber, I could be mistaken, either Uber or Lyft, that the drivers wanted to be considered as full-time employees. I don't know how far that has gone, but when you work as a contractor or a freelancer, or when you work as a caregiver and they do not take out any withhold any funds or any taxes from your earnings, they give you a form that is called a 1099. So most caregivers or contract workers or freelancers receive a form called 1099. So what that means is you have to take it upon yourself, go to your tax person, tax preparer. Hopefully you come to us, we help you. Then we will prepare the return for you and we'll calculate how much you is due to the government. So in most cases, when you are working as a 1099 person, a contractor, in most cases, 99% of the time is you are not due a refund because you are the one who is supposed to pay the government, because all the money that you are given weekly, bi-weekly, or monthly, it comes to you in a huge sum. This is why contract freelancers or contract workers or caregivers may receive a higher paycheck. It's because nothing is deducted from their earnings. Now, a 1040 standard tax form, this is a form when you're filing taxes, the printout they give you is called a 1040. Now, if you are amending your taxes, it's called the 1040X. So these are the main forms that we focus on, especially when you're dealing with the individual tax preparers. It's either somebody withholds your taxes, gives you a W-2, or they don't withhold any income, then they give you a 1099. And then when preparing the tax forms, it's called a 1040. It's important, very, very important, that you keep good records of what happens in a year. So one of the common questions that I get is, how much do I owe the government? How much do I have to pay? So it is very important that you keep records, because in the event that you get audited, the government has to verify the receipts, the expenses that you have incurred, that you showed them that this is what happened, but they'll say, okay, you said you did ABC, show us the receipt. So you want to make sure that at least you are doing your due diligence to keep your receipts, keep record of the mileage and all that good stuff. So especially in this day and age, there are a number of apps, or there are other smart ways of keeping up with your records. So to support your income, your deductions, and your credits on your tax return, make sure that you keep good records. Now, the duration as to how long you should keep your records, the IRS requires that you keep them for minimum of 3 years. So after 3 years, the rule is 3 years. So I mean, it's always good practice. You keep your records for a good period of time, so that just in case something comes up, you are able to go back and say, oh, this is what happened. Because when you claim or you indicate something on the taxes and then you cannot back it up, then in most cases you get penalized. So you don't want to be penalized. You want to make sure that at least you have your paperwork in order. So be a person that keeps records. Now, what is a standard deduction versus an itemized deduction? So standard deduction, a set amount to reduce your taxable income. So the money that you receive is gross, net, and then subtract your exemptions, then you arrive at your taxable income. So the money that you receive, when you subtract all the taxes, you get taxable income. So a single person for the year 2022, your standard deduction as a single person was 12,550. So for instance, if you make a certain amount, let's say you made 50,000, they do not automatically just charge tax on the 50,000. So whatever applies in your case. So from the 50,000, subtract 12,500, then you pay tax on the difference. And if you have other deductions, you have other credits, then it further reduces your tax bracket. So for the purposes of this presentation, there's what is called a standard deduction for a single person, especially for 2022, was 12,550. For married couples, let's say a married couple made 50,000. So they'll subtract 25,100. So you pay tax on the difference. So this is why it's always good to file if you're married. That is if you're married. You can't file married if you're not. So for married couples, this is a deduction that helps to reduce the tax liability. And also there is what is called itemizing your filing. So when you're itemizing your filing, what it simply means is, let's say you had expenses that you believe are more, let's say for a single person, you believe they are more or exceed 12,550. So which means then you can say, okay, I'm not going with the option of the standard deduction. I think I incurred more expenses. Maybe I had some medical cost or mortgage interest. So it's not everything that you get, it is factored into the deduction. There are certain cost, for instance, medical. Let's say you had bad teeth and then you had to do some denture work, and it's something that you really need to, let's say you're a communication person, you need your mouth to speak to carry out your work. So if you don't have good teeth, then you can't, it impacts your work. So therefore you can deduct that. So it's part of like, oh, in order for me to carry out my work, I need this. So it can't be anything else. It has to be work related and something that you can prove. So if you think it's there were certain things that exceed either the 12,000 or the 25,000, then you can itemize the deduction. So again, your tax preparer, they know more about this, but for the purposes of this presentation is so that it's for you to know that you can either file standard deduction, take the 12,500 or take the 25,100. So the good thing is this 2023, the IRS has adjusted the standard deduction. So they have gone up, and we'll talk a little bit more about that. Common tax credits. Yeah, so child tax credit. For those with qualifying children, when you have a child, this is a plus. It helps to reduce your tax liability. So when you get your standard deduction and then you say, oh, I have 2-3 dependents, then it further reduces your tax liability, which at the end of the year, end of the day, it helps at least to have something to take home. It's the same for the earned income credit. So earned income credit because the US employs a progressive tax system. So this is why earned income credit is very beneficial for low to moderate families, because it helps so to have at least a little income coming back. So you get a little bit to help adjust your taxable income. So this is always a good thing. Having a child, or a dependent, doesn't necessarily have to be a child. It's a dependent. A dependent could be your mom, could be somebody senior, or it could be a biological children, a child, or it could be somebody else, a adopted child. That's also considered part of the credit. Resident versus non-resident. In other words, a citizen versus non-citizen. So when it comes to paying taxes, everybody is subjected to the same tax code, tax system. So if you are in the US and you're working, then when it comes to paying taxes, you have to pay just the same as the person who is a resident, even though you're not. When you make money in the US, when you've earned an income, then you are obligated to pay taxes on that income. And a non-resident, if you're coming from another country and you are here in the United States, you've earned an income, that's taxable only on the US income. If you are working, let's say in Ghana, Kenya, Zambia, Congo, whichever country, they cannot have you pay tax on the income that you earned outside. Is the income that you are earning in the United States. Now we're going to shift gears a little bit and talk about ITIN, individual tax identification number. So this is a very hot topic for a lot of people. We get a lot of questions about ITINs. What is an ITIN? Well, an individual taxpayer identification number is a tax processing number issued by the IRS for tax purposes. ITINs are for federal tax reporting purposes. So we talked about federal taxes, we talked about state taxes, and we talked about local taxes. So when you are paying taxes and you do not have it, Social Security, let me put it this way. When you are required to pay taxes, the key word is required to pay taxes, and you cannot get a Social Security number because natives, people are born in the US. At the point of birth, you are issued a Social Security number. Now, if you're coming from a foreign country or another country and you are coming to work in the United States, most people apply for ITIN, but ITINs are not designed for that purpose. It's for those who have a tax obligation. So ITINs are for federal tax reporting only and not intended to save for any other purpose. You can open a bank account, but that's not the purpose. It's for tax obligation. This is why it's called individual tax identification, because you are paying or owing the government tax. Now, who gets to file or obtain an ITIN? So an ITIN are numbers issued to individuals who do not qualify, like I alluded to get a Social Security number. And you are required. So the key word again is you're required to file taxes. We won't go into the nitty-gritty of what does it mean to be required, but just know when you have a tax obligation. Let's say you are babysitting someone and the person gives you a 1099. You are required to pay tax. So that's how people end up applying for ITIN, is because I was babysitting someone and then somebody gives me a 1099, because they'll send a copy to the IRS, they give you a copy, they keep a copy for themselves. So at least the goal is now, then I have to pay taxes. So that's what makes this country different, is because I think the tax policies are firmly implemented. Even when you go into a store to buy some candy, you still pay tax, but that's a separate type of tax, which is called sales tax, which we're not covering in this presentation. Now, continuing on ITINs, The ITIN, or most people refer to as a tax ID, was instituted in 1996 by President Bill Clinton. So people, for instance, somebody's in school in the United States, or you're here for a short period of time, and then you needed to buy a car, or you needed somebody sending you something, and there's some business transaction, and for you to transact, to be able to operate or do certain task, you needed to get a tax ID. So at least because of the tax obligation to some of the things, then people were getting items, but it's not something. I have friends who are outside the US, they are doing some business, and then they had to get an item, so at least they could cover the tax portion of the transaction. So it's for people who are intending to pay tax in the United States. So the key thing is receiving an item does not in itself confer the right to work. So in other words, it's not a work authorization. Having an item or a tax ID does not give you the right to work in the United States. But the good thing is that the Internal Revenue Authority is different from the USCIS, which is United States Citizens and Immigration Services. Homeland Security. The information is not shared back and forth like, oh, this person is working. No. So just in case somebody wants to jump through the window. Who can apply? Is anyone wishing to pay tax? Anyone with a tax obligation? How long does it take? In most cases, it takes about 6 weeks, but post-COVID-19, there were some backlog. So the standard, I think, as of this time, it's 6 to 8 weeks. So taxes, we can't get away from paying taxes. So there are companies that specialize in this preparation of taxes and tax IDs, and also business registration. And one of the companies is the company that we belong to. Yeah, as you can see up there, there is a phone number, and for tax questions, tax IDs, business registration, that's the number to dial. So we're going to transition a little bit and talk about the other things that are covered by Western Express and immigration document preparation. So immigration document preparation is a very hot topic. So I just want to make mention that immigration document preparation, we are not a law firm. So I am required to have this disclaimer that we are not a law firm, and a law firm gives you advice. We do not give you advice. So we prepare immigration documentation based on the instructions given by USCIS, the government itself. So for instance, you do not need to have an accountant to prepare a tax return for you. You go to a tax preparer. They do not have to be a CPA. And the same thing, for instance, a person who wants to apply for asylum needs advice as to how the process works. Now, a person who says, I want to apply for work authorization, they are stating what they want. They're not asking for advice. So we prepare documentation when a client comes to us and tell us what they want without seeking advice. Again, a person who's seeking advice is like, ask the question like, how do I do this? Therefore, they have to go to an attorney who is legally qualified to give legal advice. So immigration document preparer, we prepare documents based on the guidance by the USCIS. So we do neutralization, citizenship, work permit, adjustment of status, and plus more. So you can reach out to us if you have questions, concerns about these documents. But if you have a complicated situation, those are not, we are not giving advice to people. They are attorneys we can refer to you to, but if you have a specific task that you want, for instance, you do not need to go to an attorney if you want adjustment of status, because adjustment of status, there's a form and there are instructions, and that's how we prepare those. If somebody says, I want to file for citizenship, it's easy because you simply follow the instruction. But when somebody comes to us and say, how do I file for, I have this status, refugee status, or how do I file for asylum? No, a question that starts, how do I do something, which means somebody seeks information which they don't know. So the people who can give legal information are attorneys. So here we are immigration document preparers. When a person comes to us and tell us what they want, then we do it for them. But if they're asking, they don't know what they want, then we say, no, you consult with an attorney. So because there is what is called the unauthorized practice of law. So if you have a case which is complicated, then you don't know what to do, our advice is contact an attorney. And there are some attorneys we can refer you to, but do your due diligence and find out from an attorney, because what we prepare, the documentation for us is a simple stuff. Somebody wants a citizenship, work permit, adjustment of status, and travel document. Those are simple to apply, but anything to do with advice, we do not offer advice. I just wanted to make sure that we have that on record. So this presentation, I think we are almost towards the end. Let's see. Yes, so we've come to the end of our presentation, and that is the contact information there. You can see the WhatsApp. Everybody these days is on WhatsApp, but you can call even directly on that number, the 202-733-0809. And then we have two email addresses. There is the main one, the info@waysfinancial.com. And also we have the Gmail. Gmail is pretty easy to get to. And so, but you can use any of these two and get in touch with us, or you can check out our website. So we are tax professionals. If you have tax and simple document preparation, we'll be glad to help. And for further questions, just consult, check out the website and reach out. We're here to assist.